And finally, I want to talk about company filings, the SEC requirements, and all the different reports that they have to file to the SEC. Publicly traded companies in the US are governed by a regulating body. So that regulating body is the SEC, stands for Securities and Exchange Commission. And every public company is required to publish quarterly earnings reports 4 times a year, as well as various other reports, but let's focus on the main ones. And they have to publish an annual report once a year after their fiscal year has ended. Stocks are going to be very volatile during earnings, just before earnings, and can rise or fall by a lot after the earnings report is released. Companies also release their outlook for the future. Sometimes their earnings may not be too bad. They would have met expectations. However, they would say something like the next quarter is not going to be so good, or we're seeing some headwinds over the next 2 quarters, things like that. And that can also reduce the value of the stock. And why is that? Because the stock always prices future earnings. So a stock will incorporate all the information available to it about this company's future into the stock price itself. And so if when companies release a negative outlook, that will be immediately reflected in the stock price itself. All earnings reports are usually followed by a conference call either that day or the next day by senior management that go into explaining what really the state of the company is, and if there are any unusual items that have been mentioned in the earnings report, then the senior management would like to clarify that, and so they do that on a conference call. Let's look at earnings reports themselves. So investors look for 2 key numbers in any earnings report. What were the quarterly revenues? What were the earnings per share? Now, the third important number that they look at is they compare it to previous years, the same quarter, and they evaluate whether the company is growing well or the growth has slackened off a little bit. So all those things are also looked at. The important thing is analysts expect, based on their analysis and based on what the company has given them in terms of information, analysts expect a certain number to be the earnings per share. So it might be 68 cents per share. It might be whatever, $3 a share. And that key is those expectations. If the expectations are met with, the stock might rise. If the expectations are beat in a very good way, then the stock will rise a lot. And on the other hand, if the expectations are not met with, then the stock price is going to fall. So a great site to look for what to expect from an earnings report is this site called earningswhisper.com, and I'll show you that a little bit. So let's go now and take a look at what happens to stocks during earnings, before earnings, after earnings, in many cases. And then I'll also show you the site where you can look at various earnings reports or earnings expectations, analyst reports, and various other information about earnings reports. Now, to analyze any company's earnings reports or their financial statements, you can always go to their website. You should be able to see something for investor relations on their website. So let's go ahead and see what they have. Investor relations right here. So about IBM, you'll always see an investor relations if it's a public company. And investor relations will tell you how they've filed their earnings reports. So here we are, 2015 Q4 earnings report, press release, prepared remarks, charts, and audio. So let's go and just click on the earnings release. And here you can see fourth quarter diluted EPS, earnings per share. It'll tell you all of that. Full year, it'll tell you what increased, what decreased. And then it's followed by a detailed report. And this report can be, if you're a fundamental investor, this report is what you should be reading, because this report has everything that you're looking for from the company. Now, obviously, companies cannot lie about these things. They are public companies. And so they really open up, this is your visibility into the public company, this report. And it'll tell you by geography, it'll tell you strategic imperatives, all the different things that they're doing, services, software, revenues, hardware, everything. And, and how much they're financing and what their debt is, what their expenses are. So this earnings report really comes with this financial statement, and that can provide a lot of insight into the company. And so I would highly recommend, if you're a fundamental investor, to go through these financial statements. And even if you don't understand a lot of those things, it's fine. It's actually great to read this report because that will give you a very good idea of what this company is up to. It's your one very good look inside the company to see how it's running and how it's operating, and most importantly, what the future looks like, what the future outlook is for the company. And they'll tell you all of that, all the risks that are there in their business. They'll tell you all of that in this report, and it's a very good report to look at if you're a fundamental investor. If you're a trader, you don't really care about all these things because you're probably going to be in and out in, say, either a week or a month or a couple of months. So the long-term picture really doesn't matter too much to a trader. Although, even if you're a trader, you should keep one eye and one ear on these kinds of things because then you know how the stock is going to trade even in the near term. Basically, once a company reports earnings and they beat, let's say. So, for example, in our case, we have Priceline and Chipotle. Now, yesterday we opened Priceline. And so I said this momentum is going to carry through for a few days at least. And you can see it certainly is carrying through. It's up $18 today. And yesterday it was up some more. So we picked up the stock. I only bought 5 shares and that's why the profit is only $95. But still, if you look at the charts on Priceline, and you can see today is a very strong day, even though the markets are somewhat down, you'll see Priceline is up nicely actually today. And that's because the earnings momentum is still in the stock at this point. I would expect it to continue for another couple of days maybe, and then it'll start flattening out somewhat. And that could be a time you might want to take your trade off. But if you're a longer term investor, you know that over the next 2 to 3 months, Priceline is going to do well because it obviously came out with a very good earnings report. There's no saying what the next earnings report is going to be. So in fact, let's do this. Let's go 3 years and let's do a weekly because we don't want too many bars there. So now you can see on many days here after this latest report, Priceline has really jumped up nicely. But look what happened here. On this earnings report, it was at 1476. That's its all-time high, gapped down to 1381. So that's a loss of about $100 right there. Let's see what happened on this one. On this one, it took a nice move up, but then for some reason it started coming back down. Here also was a nice bull move after this one. Here was a bear move. So Priceline disappointed and therefore it fell almost $70, $80. So whenever you have earnings reports, you're going to see that there are big moves. And so if you do have stocks, if you're a long-term investor, there are many things you can do to either protect or hedge, and we are not there yet in this course. When we reach options, you're going to see many ways in which you can hedge some of these events because every 3 months, the stock is going to report its earnings, and it's going to be a very volatile event. It can go either way because nobody knows how the company has done until they come and release their earnings report. Could take a huge move up or it could take a huge move down. So how do you prepare for something like this is what we'll cover when we touch upon options in a later section. But for now, just watch out for earnings reports. They're very volatile events and stocks can move a lot during this time. I also want to show this site, earningswhisper.com and earningswhispers.com. And this is a site that monitors all upcoming earnings events. So in case you're interested to see what is coming up and what the general analysts feel, all of that is shown on this site. Some of this is Priceline beats. It met with expectations. You can look at various things. What's coming up for this week on Feb 22nd, the week of Feb 22nd, what they expect. And if the company beats expectations, then the stock is probably likely to rise. So this is a good site to come and do some research, look at what analysts are estimating for various companies that you're planning to invest in or already invested in. So that's it for earnings. But before we go to the next section, I want to show you a little bit of a bonus because now many people may have stocks and for various reasons, whether you want to hold it for the long term or for tax purposes, you may not want to sell your stock. So I'll show you a little trick that you can use every now and then because earnings events can be pretty volatile. And if you want to protect your stock while you go through this earnings event, then you can use this technique. Thanks.